So thank you for attending today's webinar here at xm.com. We are going to mainly look at what is important right now, particularly for foreign exchange markets, but also for financial markets more broadly, and some markets that I also know that a lot of people are interested in, like commodities, oil and gold, brief mention of Bitcoin as well. And it will not be just a historical presentation. We are going to try to to give some scenarios how these themes are going to evolve until the remainder of the year. So I think that's what's most interesting for people to try and anticipate what is going to happen in the future. But I have to warn you, we are not fortune tellers here. We are going to give some scenarios, and that's always with it's always to say that with the benefit of hindsight that this was bound to happen, etc. But beforehand, we can try to have all the data, to put all the data together and try to come up with possible scenarios. And that's what I'm going to try to do. Now, what are we going to talk about? First of all, what has happened so far during the year? Who has been the winner and the loser? I think it's always important to start from this point because I think it helps to set the framework where we are right now, what has happened. So I think that's particularly interesting. We're going to talk about the US and the Fed, the Eurozone and the Euro, and Draghi's final act, as we like to say, because the ECB chief is retiring this autumn. Japan, the Bank of Japan, the yen, and the policy divergence. And all about Brexit in the UK. We have a new Prime Minister today, Boris Johnson. We'll talk a little bit about that. Finally, Australia and China, crude oil and gold, and summary going forward, and some ideas of what I think could work or what I think might not work so well. So, what are the highlights so far this year? Well, surprisingly, the Canadian dollar is the best performer. The yen has also done well this year. So it's very strange because the yen is usually up when stocks are down, but the yen has also done very well. We will discuss why this perhaps happened. The euro and the pound are the biggest losers so far, and the dollar, Aussie, and the Kiwi, the Australian and New Zealand dollar, are not doing much. So the US, Australian, and New Zealand dollars not doing particularly well. And here you see the dollar index is positive, so we always start, what is happening to the dollar? Dollar is up, not across the board though. It's up mainly against the euro. The euro is down almost 3% against the US dollar. The pound is down 2.5%. So I think you see the biggest losers. But reversing that, we see the loonie or the Canadian dollar up versus the US dollar, because USD versus CAD has gone down. It's always a little bit confusing because USD CAD means when that goes up, it means that the loonie is weakening. So it's the opposite from euro dollar, obviously. And one of the biggest swings has been the euro yen. So obviously we're pairing the yen, which was one of the winners this year, with the euro. Now, assets, of course, this has been a great year for stock markets. Developed markets in the US is up by around 20%. it has performed much better than emerging markets and Asia. And crude oil was the best performer, actually, rising even faster than the stock markets did. WTI, West Texas Intermediate, is up 25% as the Iran sanctions are limiting supply. And gold is also up respectively by 10.5% at 6-year highs. Now, bond yields have gone down, so the yield of the bonds has gone down, which means that bonds have risen in price. This is because of the reassessment, what is going to happen with monetary policy, that we are going to get some loose policy, some interest rate cuts, maybe some more QE. And the US 10-year yield is down a very impressive 63 basis points since the beginning of the year. That's quite a move. German bonds, 10-year bonds are yielding at minus 0.4%. So you can imagine if you hold a German 10-year bond until its maturity, you're very roughly guaranteed to lose 4%. So this is very, very strange phenomenon, and just goes to show you what kind of extraordinary times we live in right now. So you see oil followed by the US benchmark, the S&P, and developed equities following, emerging markets not doing so well. Now, right from what I want you to notice in this performance chart is that basically almost everything outside of farming goods, like of what farmers produce, has gone up. Bonds have risen, price of bonds has gone up, gold has gone up, stocks have gone up, bonds like we said. So this is quite extraordinary. So this is the mirror image of what was happening last year when everything, stocks, bonds, gold, were in the red. So that's something interesting to note. Moving on, let's start with the US economy and what was happening, what is happening there. Obviously, the biggest economy in the world, it's the most important one. It had a very good first quarter, the US economy, but it's looking a little bit weaker in the second quarter. Nothing dramatic, mind you, but still some deceleration. What is happening domestically, the US is doing very well. We see the US consumer, for example, doing particularly well, but the external picture is weakening, and the US is worried that it might be affected by the negative developments outside the country. The job market is very tight. Unemployment is less than 4%, so that's quite an achievement. Very, very, very solid job market. Inflation is low. Inflation is around 1.6% core PCE. The core inflation excludes food and energy, which are volatile items. So this is very low at 1.6%, and this is more than anything else what is allowing the Fed to proceed to a rate cut, most likely at the end of the month. So, I mean, the US economy is doing great. GDP growth is positive, unemployment is low, but inflation is a bit below their target, so this is giving them some space to cut rates as an insurance. And indeed, like I say, they are going to proceed for insurance rate cuts. And here we see with the orange line, the S&P 500, we are at new all-time highs. Some market participants are celebrating this, saying that You know, the 3,000 is a huge milestone. Maybe some of you who are older, as I am, let's say, will remember the Dow 10,000 celebrations. Okay, S&P 3000 wasn't celebrated as widely, but still, it's an uh, important landmark that shows how well stocks have done. And you should remember that in 2009, stocks bottomed, the S&P bottomed at the 666. That was more or less the bottom for the S&P. So you can imagine in 10 years what kind of performance US stocks have delivered. Now, some may say this is a bubble. I mean, this is an open question, of course, but you don't usually know when something is a bubble until it bursts, unfortunately. And here you see dollar yen. You would expect dollar yen to head higher as stocks were moving higher. This has been the case in the past, but we are not seeing it this year round. We are seeing both the yen get stronger and stocks get stronger. I will discuss this a little bit more as the presentation progresses. Now we have these tense trade talks between the US and China. They are not fully back on track yet, despite the ceasefire that was achieved, let's say, at the end of June. Characterizing it as a new Cold War, I don't think that's that's unrealistic, because we see China and the US clashing. President Trump is also threatening tariffs against the EU and Japan, of course, and we had the Mexican standoff over the tariffs against Mexico. So there was a standoff there, and eventually there was a compromise. We'll see whether Trump is going to try to keep things a little calm ahead of next year's elections. Just remember that next year we're going to get US presidential elections, so that's going to be exciting, and presidents try to prepare the economy to have the best possible picture before going into elections, obviously. The Fed hasn't been on hold since December, but now it's said that it's going to ease. This could be also the result of some political pressure, because President Trump has been on the Fed's case for quite a while now, and maybe the Fed is accommodating, and it has put it under intense pressure. Of course, the Fed being independent, they would refuse that any pressure is being put on them, but I just mentioned this for you to get the picture and the background of what is happening. Now, this could have been dangerous for the dollar, especially against majors such as the euro, but we also have the European Central Bank, which is meeting tomorrow, and we are going to see what it will have to say about its policy. And so the Fed is going to cut rates, but the ECB is also going to do some looser monetary policy. So this has not really hurt the dollar as much as one would expect. We're also wondering how much the Fed is going to cut, probably not by much. And now the market is expecting 0.25% or 25 basis points cut on July 31, and with a small probability that there's going to be a larger 50 basis points cut, or a double cut, as they say. So you see the Fed funds target is 2.25 to 2.5. You saw where the two-year Treasury yield is very interesting, because it tracks expectations of what is happening to interest rates over the next 2 years. And here you can see that the market is expecting, let's say, 3 to 4 cuts over the next 2 years or so. So maybe Fed funds rate is going to go to around 1.5% or maybe even lower. The dollar index, well, it hasn't been the most exciting year. It is up a little bit since the beginning of the year. It did peak, but we're seeing it more or less being a range bound or rangy behavior. Now, what is happening in the Eurozone? News is not so good. Germany, which is the powerhouse of the Eurozone, is facing a serious slowdown, so not much growth. Why is this happening? Well, we have the trade and Brexit uncertainties, and Germany is a very export-oriented nation. It has been hit particularly hard by the slowdown. It exports a lot to China also, so it has exposure there. So it's interesting to see this slowdown and what the ECB might do about this. Really no inflation to speak about. It's really almost nearing Japanese style inflation, the Eurozone. Not yet. Okay, I mean, it's better than Japan, but inflation is relatively low. The good news, the unemployment rate continues to decline. It was less than 9%, I think, the last time I checked. So it's making significant progress in terms of jobs, but the outlook not positive. It's still not positive. We had the PMIs today, by the way, the Eurozone PMIs, and it showed manufacturing deep into recession with a reading of 46.5 or something. This shows that manufacturing in the Eurozone is hurting a lot. Now, of course, the biggest sector of the economy, services, are doing much better than manufacturing. So this is counterbalancing, and in the end, we're getting positive growth. But manufacturing tends to be a leader, let's say, despite its smaller percentage, it may lead the fluctuations in economic performance. So there is some worry there, and you can see the market clear deceleration during 2018 and 2019. And of course, GDP growth falling from the peak of around 2.7% to growth of around year-on-year of around 0.4%. So that's pretty low growth, but still escaping recession, probably. The Eurozone is, we'll see. So this is putting pressure on the ECB. What can they do? Well, maybe not much, but it has to try because deposit rates are already into negative territory. Maybe they're going to try to drive them deeper into negative territory. They are talking about taking the deposit rate maybe from minus 0.4 to minus 0.6%. Maybe they are going to restart QE, and we have the new ECB chair is going to be the IMF director Christine Lagarde, is also expected to be a relative dove. What does dove mean? Well, someone who leans, let's say, towards looser monetary policy, and Mario Draghi has certainly been a dove. He has taken unprecedented action to help the Eurozone in terms of its QE program and the negative interest rates. And of course, the euro is likely to drop if we have, the more aggressive the ECB is with loosening, the more the euro is going to drop. Now, European politics is another risk for the Eurozone, and is something that could be weighing on the euro overall. We had European Parliament elections back in May. The populists, okay, they did well, but they didn't sweep the floor, let's say. So the mainstream parties did okay during the European Parliament elections. However, we have this situation in Italy, which is quite risky. There is tension between Italy and the European Commission, and we are seeing some also populist style politicians in Italy, so this is creating problems for sure. Although I can't say that something really major has happened so far, the situation is uneasy and there is tension. People are keeping a close eye of what is happening there because it's also a very big economy, Italy. We'll see with the new leadership of the European Commission and the European Council. I don't think something drastic is going to come out of that. But we have to see what is going to happen with Brexit, and this is another concern. So as you can see, Brexit appears on the Eurozone slides, and of course it's going to appear on the UK slides. The euro dipped to a new low, like dipping below 112, so it's looking bearish. And note that the euro is falling even against the dollar, which the Fed is expected to cut rates. So this is something to note. On to Japan, on our tour of the world, let's say. It did well in first quarter, but it likely contracted in second quarter. We haven't got the data yet. Exports took a hit. Another export-oriented economy, Japan, and of course, major exporter to China. This has been particularly affected. Inflation also heading down 0.6% year on year, well below the 2% target of the Bank of Japan. It has been proven almost impossible to raise inflation in Japan. Unemployment is one of the lowest in the world, but wage growth has also weakened, and real wages are down. So basically it means that there haven't been wage increases. Household spending has been surprisingly resilient, but it could decline again if wages don't pick up, and as we are going to get the sales tax pretty soon, not pretty soon, during the autumn in Japan. So what is happening? The orange, you see the inflation rate. It actually picked up from what it was at the beginning of the year. But average monthly cash earnings have actually fallen into slightly negative territory, and this is bad news for Japanese households. Now, Bank of Japan, let's say that it has already spent its ammo. It has spent most of the ammunitions it has. So it's very difficult to say that this is going to that they have tools that are ready for creating more stimulus. So this is interesting. So they're in an interesting situation. They need to do more, but it's not clear what they can do given that they have already done a lot of QE. Negative rates really not popular in Japan. They did some experimentation with that, and there was really a big backlash. So basically, if the trade war drags on, the risk of recession could become very high. We also get probably a strengthening yen, and there's not a lot of flexibility on things to do. Now, this is why, despite the negative picture of the Japanese economy and the fact that the Bank of Japan doesn't have a lot of ammunition, this in effect is a positive for the yen, because if it has run out of ammunition and others are spending their ammo, like the Fed, the ECB, then the yen could get a little bit stronger, as we have seen the yen getting stronger this year, by the way. So you see dollar yen more or less where it started, where it was back in January, but a little bit stronger overall than the US dollar. it peaked around 112. Now it's around the 108 level. So interesting fluctuations for the Japanese yen. Now on to the UK. Well, the UK is the biggest issue, of course, is Brexit. And the more this Brexit uncertainty is going on, the more the economy is getting hurt. Now, wage growth, however, is doing very well in the UK. Employment growth is slowing, however, and this could slow wage growth as well. The recent PMIs, so these are the business confidence indicators, have shown that there was a big fall, and the services PMI was barely above 50. Like I said before, services is the biggest part of the economy. It tends to, if services start to contract, then the whole economy probably falls into recession. And the fact that services PMI is barely above 50 is an issue. And the more this Brexit uncertainty is striking on, the bigger the cost for the economy, like we said. But we'll see. And no-deal Brexit could be even worse. So a no-deal Brexit could raise the uncertainty even more. Investment has been hit because of the issue. So we had Theresa May. I think today was her last appearance as Prime Minister in Parliament, and she's going to see the Queen to put Boris Johnson in as a Prime Minister. Now, Boris Johnson has become Prime Minister, saying that come what may, the UK is going to leave the EU by the deadline, the end of October deadline. It's difficult to see how they are going to come up with a good alternative to the deal that Theresa May has negotiated. So we have to see. And on top of that, we have the Parliament, which really seems to be against a no-deal Brexit. I can't say there's like the no-deal Brexit in Parliament is not commanding a huge majority, but we'll see. At the moment, Parliament could try to stop a no-deal Brexit, so maybe there could be a vote of no confidence and general elections could come. So, I mean, all these scenarios, they are creating uncertainty, and the pound's prospects are not looking positive right now. It could test the 120 level against the dollar. Today it was a good day against for the pound. It rose above 125 against the US dollar. However, I don't know if this was a case of selling the rumor that Boris Johnson would become Prime Minister and some short covering today leading to this short covering rally. We'll have to see. Of course, there's always the possibility that the UK and the EU find some compromise, they sign an amicable deal, and things get moving on. This is like the most pound positive scenario. But right now, it's looking, situation is difficult. So what is the Bank of England going to do with all this Brexit uncertainty? Well, actually, the Bank of England was trying to signal a rate hike going ahead. However, given Brexit and global risks, such as trade, that we talked about, the trade wars, now this is looking less likely. So next week, when the Bank of England meets, right after the Federal Reserve, which is expected to cut, as we said, 25 basis points, we will watch very closely to see if they are abandoning their tightening bias and pledge to support the economy, because the UK economy seems to be slowing down according to the PMIs. So it would be interesting. But of course, if there are signals that the Bank of England is going to loosen policy, it's going to could hit the pound a bit further. So you see the pound, it was doing fairly well. It rose up to 133 in around March, but things have not been going so well for Brexit, and this uncertainty has taken a toll. On to Australia. We're finishing up with the economies fairly soon, our trip around the world for the major economies. Low inflation, healthy labor market, but what is Australia's economy doing? Mainly exporting a lot of raw materials, exporting to China. So this uncertainty and slowdown for the Chinese economy absolutely hurting the local economy. The Australian dollar has rebounded since June because it had taken a beating because the Reserve Bank of Australia was starting to cut rates. But since after that, we are seeing the Fed become more dovish. We are expecting the Fed rate cut. We are expecting action from the ECB. So more or less, the other central banks joined the club of the Reserve Bank of Australia, the club of looser policy. So this helped support the Aussie. So there was a cut in June and a cut in July, one more cut by the end of the year. That could be a fiscal boost, so this is going to help. And so if the RBA is more or less over and done with its rate cuts, we still have the Fed expected to cut rates by 75 or 100 basis points. So this is good for the Aussie. It's supporting it. It's not rallying, but it's holding its ground, the Aussie, whereas you would expect the Aussie to be hurt particularly badly because of the trade war and its relation with China. And you can see the spread between the 2-year Australian bond and the 2-year US bond. So it has narrowed. And you can see the exchange rate also following this narrowing. So this is on this axis is the Aussie, and on this axis is the spread. So here you see the Aussie more or less falling, but finding a bottom around 0.68. So now it's around 0.6990, 0.7. It seems to be that 0.7 is a very key psychological area for the Aussie. On to China, the world's second largest economy. The big news that growth slowed to 6.2%, the slowest in nearly 3 decades. So since this experiment started with the Chinese economy adopting market reforms, this has been the slowest growth, even though most countries would kill to get 6.2% growth. Inflation is under control. There is also the question of more stimulus for the Chinese economy. The yuan, the local currency, is holding its ground. There were worries that it could fall down. It could fall down quite a lot below the actually USD yuan exchange rate to rise above 7. But as you can see, it has held and it has come back to around 6.80. Now, we had this episode where the US and talks between US and China broke down. Then there was a truce. Now the truce is being, let's say, renegotiated. I wouldn't say renegotiated, but being implemented. So Huawei, US companies are going to be able to sell some components to Huawei, the Chinese telecoms equipment giant. And on the other hand, the Chinese are going to start buying agricultural products from the US. There is still the threat of hitting China with additional tariffs by President Trump. But this is likely to be a longer-term issue. But to be honest, what is the market expecting? It says that things between the US and China are not going to get much rougher because Trump wants the economy to be in good shape for winning the elections next year. So maybe he will not not push things to the limit, but rather try to keep the process alive, and maybe if he wins, we'll see another leg of this trade war intensifying. But it's more about a truce and ceasefire and maybe this war continuing in the future. It's probably a long-term theme that we have to watch. So you see the GDP growth falling and retail sales also slowing down a little bit, although, I mean, again, retail sales approximately of 10%, a very good performance still. Crude oil, we said, if you remember at the beginning, that crude oil was the best performer. It's up 25% during the year. What has happened? Well, OPEC's output cuts. This is very good. Lower production from Iran. We have again sanctions on Iran, and not only sanctions, but we have the threat that what is going to happen with Iran, there could be a conflict, although it's not looking like a conflict, but the situation in the Straits of Hormuz, we constantly hear of new episodes there of tankers being seized, tankers being bombed, so it's not looking good there. So here you see what is happening. This is the production of Iranian oil, and this is when there was the nuclear deal back in 2015. Immediately Iran's production jumped from around 3 million barrels to a peak of 3.9 million barrels, but with the new sanctions from President Trump, the production has fallen from 3.9 to 2.1. So it's interesting to see these fluctuations in Iranian production, and it's not a negligible amount of oil to take off the market. If you take 1.8 million barrels off the market, it's significant. We are near the end. Gold has been a winner also. It has gained 10.5%. Why? All this talk of looser monetary policy is helping gold. Gold being denominated in dollars. If the dollar, let's say, goes down, if there are pressures, if central banks have looser policy, this is pushing gold higher. But also we have gold benefiting from risk aversion, and there are slowdown or recession fears, or fears of a crash, let's say, in the stock market, and that could definitely. So what are the lot of traders doing? They are using, let's say we see the stocks going up quite rapidly, so they are buying stocks, which is the chief risk asset, let's say, but at the same time they could be hedging by buying some gold, some yen, some Swiss franc. So it's very strange to see both stocks, which are risky asset, which goes up when things are going well, but gold also going up because of this monetary loosening, but also I think because a lot of investors, they like to buy hedges as well as with the stuff that is working out. And this is the significant that gold broke above 1300 6-year highs, as we said. So it's not something, although it's well off the cycle highs. Gold, I think around 1900, it's well off those highs that it was back 8-9 years ago, if I'm not mistaken. So finally, Bitcoin. Actually, it's not oil that has been the best performer. It was Bitcoin, but Bitcoin is not to everyone's taste, but I have to talk about it because it has certainly been a tumultuous year for Bitcoin as well. It has gained 165% year to date. What has been the driving force? Well, we had Facebook's Libra announcement. Libra is not exactly a cryptocurrency, but it shows that even mainstream companies are trying to enter the alternative currency area. I'm not saying cryptocurrency on purpose, but it shows that there is a lot of interest there. There is also retail adoption. Whole Foods now accepts Bitcoin payments. Institutional players, because Fidelity Investments launched Bitcoin trading. Fidelity, obviously a giant in terms of mutual fund and brokerage in the US. And are we seeing the Chinese maybe invest into Bitcoin, trying to in their effort to have capital flight to take money out of the country? We don't know. But it has sometimes acted as a safe haven on big events or market turmoil, but at the same time extremely, extremely volatile. A lot of volatility. You can get daily swings of like 10%, so not everyone's cup of tea. And also, it's very difficult to get fundamentals for cryptos. Now, summary. We're almost finished. US dollar is holding up. Fed dovishness is being offset by ECB stimulus signals. The euro is taking some damage. We're looking for more quantitative easing or more negative interest rates by Mario Draghi and company, so it could lose a bit more. The yen is quietly gaining. It's a safe haven, but also we said the Bank of Japan has run out of bullets. The pound is being battered as no deal Brexit worries intensify. And the Aussie's fate hangs on the trade talks and obviously on the RBA. Stocks are moving ever higher, and the latest trend is bad news is good news for stocks. Now, why? Because bad news means more rate cuts, so this is something that the markets cheer. Bond yields are crashing lower. We thought that we had seen the last of the extremely low bond yields. No, they have come back. And commodities are doing well, boosted by falling rates and the dollar coming off highs, although not industrial commodities. I would separate the commodity story because industrial commodities are very dependent on what is happening with trade and what is happening with demand for raw materials. Maybe precious metals are helped, but industrial commodities are hurting because of the trade war. I think that we have to see how that is going. So let's say the favorite trades, what is happening? The greenback has less upside potential. So I have been fond of the dollar so far, and this view was being tested because we have the Fed trying to lower interest rates. At the same time, because others are cutting rates as well, it seems that it just means that the dollar has less upside pressure, but it doesn't mean that it's also going to fall quite a lot. The euro could suffer unless economic growth in the Eurozone recovers, and as the ECB is heading for more stimulus. Now, on a relative basis, the euro could be cheap, So I'm saying that maybe we're not far from the bottom for the euro, but still, weak economy, ECB stimulus argues for a lower euro. Also, Brexit still weighing on the pound. The short trade could still deliver, but because it's overcrowded, a lot of people are shorting sterling, then you could see, rapid short covering rallies and quite significant. The yen is a safe haven play, and there is not as much ammunition for the Bank of Japan, so the yen is not looking like doing badly. Finally, and this is an addition for this first half, the loonie. The Canadian dollar is one of the winners of 2019, so I guess it makes sense to stay with the winner of the year. Why? Because the Canadian economy is doing relatively well, but at the same time we haven't heard from the Canadians that they are going to cut interest rates. So some policy divergence is building between Canada and the United States. So this is going to help the loonie. It may have some benefits, and of course another of Canada's major exports is oil, and as long as the oil price holds, this is going to help the loonie as well. I will be more than happy to answer any questions that you have. If you would like to ask anything on the presentation or about the market, I'll be more than happy to answer. And please visit our xm.com/research, which is our research homepage, to see things like our daily market comment, our forex previews, our technical analysis, special reports together with videos. I think going there you will find a lot of interesting and exciting things to see. Also our YouTube channel. Thank you very, very much, and I will now be taking your questions. Now, there's a question about, will crypto become regulated? I think regulators are unsure what they're going to do with cryptocurrencies. Ultimately, though, I see that there is some momentum building towards regulation of cryptocurrencies. Now, this could, on the one hand, stunt the growth of cryptocurrencies because the burden of regulation is going to become something that, the lack of regulation is one serious attraction of Bitcoin and company and the other cryptocurrencies. On the other hand, if there is regulation, it becomes a much more mainstream product thing, as something that institutions can invest in more easily. So I think that it is possible that it will become regulated, but this could be a positive because many regulators are taking a very, very cautious, especially some emerging markets, taking an extremely cautious attitude towards crypto, and this could legitimize, let's say, crypto if it becomes regulated. But it is a space that I don't think that it's easy to understand the dynamics, and I think it's unpredictable still what exactly is going to happen with in the crypto market. Now, there was a question from a participant that, well, yeah, the follow-up from the regulation, not anytime soon. I think it's being studied. But the thing is that it doesn't look like the regulators are near like forming a cohesive or comprehensive approach to crypto regulations, but it's going to come, I think, sooner or later. Now, concerning the South African economy, I will tell you something about the emerging markets in general right now. It's very helpful for emerging markets that the Fed is reducing interest rates. So countries that have challenges and they may have debt or they have servicing, it's good that dollar interest rates are going to come down. So this is helpful for emerging markets and emerging currencies. On the other hand, if an emerging market is primarily a commodity exporter and you have the trade wars between China and the US, then it is going to be hurting. So these are the two factors. So you have the Fed and interest rates, so low interest rates helping emerging markets, but at the same time, if there is a trade war, then emerging markets could get hit because they are doing a lot of business both with the US and China. Often they are exporting commodities. So I think this is the two things to watch. Plus, in South Africa, you also have some governance issues. What is happening to the economy? So there is a little bit of I wouldn't call it instability, but uncertainty about what is happening with the finance ministers, with the political leadership of the economy. So this is something that we have to watch. By the way, let me tell you that if anybody wants to receive the presentation in a PDF format, please let me know, and I will forward you the presentation just to have a look at it at your leisure, just to have the main points. Now, there is a question about the economy of Mexico. I think that it has been one very significant. I don't cover Mexico on a regular basis, but I think what has been particularly positive was that this standoff between the Mexican authorities and Trump, because they were thinking of Trump was thinking of putting tariffs on Mexican goods. They sort of worked out an arrangement relatively quickly. Now, for me, this is a positive for Mexico, although with Trump's focus on immigration is going to continue. It did show that Mexico can deal with Trump. So this is a positive, I think, for the Mexican economy. If oil is also doing well, of course, I would be a little careful because also there we have governance issues. We have what is happening with the handling of the economy and whether it is doing well. There was another question by somebody who left, but it's very interesting because this particular participant sold sterling, and I imagine this person sold sterling before this announcement that Boris Johnson became prime minister, was the winner of the elections. So but we see following the rise of Boris Johnson to power, we saw pretty strong performance by sterling without really seeing any fresh news or something that could, let's say, improve the odds of a successful Brexit. I think this is particularly instructive. Why? It seems that everybody was short sterling before this announcement that Johnson would become prime minister. But when this announcement came out, let's say all the bad news, because Boris Johnson premiership was not seen as a sterling positive, at least by the market. When the bad news was out, we had this rally, a lot of people closed positions, and maybe they said, well, maybe the new premier is going to make some positive statement, and this could help the pound recover a little bit. Maybe it's a little cheap. Maybe we sold it too much. So you see how difficult it is to trade certain events and what kind of timing it requires. But more importantly, I would say what discipline you should have, because you should always be using your stop losses, put your stop losses, at reasonable levels, and be ready to take a loss if things are not going, a small loss if things are not going your way. But the pound is particularly tricky because we see quite a lot of fluctuations. So you can, together with the stop losses, you can change your leverage as well. I mean, I am an economist. There are other experts who are going to tell you more about trading, but these are a few things that I would say just out of hand. Well, if there's also a question of somebody who wants to trade news, will you do it early or before they issue news, or after? Well, usually after the news come out, there is very little potential for the market to move. So the news are out, usually it gets reflected in the price very, very quickly. So usually to get the most profit potential, you have to do this before. But before, you are taking a risk, because you are taking a position saying, I believe this is the way the news is going to come out, and if you're trading like this. So it's one possible way to trade the news or event trading. Okay, we are just about to wrap up with what is happening. So just to sum up very, very quickly, you saw what are the most important themes right now. We talked about the Fed, of course, what the Fed is going to do, and the US economy. We have to watch that. Of course, what is happening with the trade wars, another very key issue. Another thing, Brexit, what is happening, particularly for the pound and for the euro. So these are some things I would say, the things that we have to watch on a daily basis, how the central banks are moving, are they cutting rates, is the economy moving along, what is happening to stocks, are they making new highs, because a lot of things, stocks can be a leading indicator. Of course, I will. I don't think that the West African nations launching a shared currency will have a big effect on the rand, the euro, and the franc. It will be significant for these countries because I think they have more or less held a steady rate, a steady relationship with the euro. So uh, I think making it more institutional may help them, and it may help these economies become more stable as long as they also apply the necessary reforms. Why is gold so volatile currently? Well, if something is jumping on to 6-year highs, then from what I can see, a lot of speculators are trying to jump on board. So this intense interest by speculators, and I see speculators, anything that is making new highs or new lows, multi-month or multi-year highs or lows, speculators are trying to take advantage of it. So I think that the presence of these speculators using leverage, using stop losses, this can increase the volatility even if the news is not so hot, but it also, the reasons that catapulted gold to 6-year highs have also been it was a big thing what the Fed said about interest rate. It was a very big change of the last 2-3 months that they were actually going to cut the rates. So you see, when there is a very big shift, I try to remind you that at the beginning of the year, everybody was talking, a lot of people were talking how much the Fed is going to raise interest rates, and instead we have rate cuts. So this is, it's quite a change. Now, of course, if you would like more on central banks' monthly meetings, especially for major currencies, please come to our research homepage, and we are sure that before each policy meeting, you can go and read what is expected in a simple article explaining what is expected by the central bank that is going to meet. For example, we have an article that was put out yesterday explaining what is expected of the ECB, what are the key issues for it, what it is going to face. So I think that is very, very helpful for somebody who is trading. We also mentioned key levels that could be hit, with trading. The same thing we are going to do with the Fed. The Fed is meeting next week, well in time. And not only that, but because central bank meetings are so important, we also make a video about the meeting. So if you are too bored or too lazy to read, you can watch a short video and the analyst will explain the key points of his or her report. So I think that will help with your trading, especially in view of these major events. So thank you so much for participating in this webinar today. I hope it was interesting to you. It was certainly interesting for me to try to gather all my thoughts together with the rest of the department. We tried to give you the best summary of what is happening right now in the world and what issues you should be aware of. As I said again, we are not, I can't tell you that we can predict the future, but we have to know what is important right now in order to be able to evaluate and understand maybe some of the dynamics. Thank you very, very much for participating, and have a great day.